Careers in Equity Research and Portfolio Management, which is organized by Assets DTU under our flagship Fortune Fest. Our honorable speaker for the day is Mr. Atul, a titan in the industry. He's the founder of Arda Wealth, an algorithm-driven portfolio management system, which almost instantly provides client with a portfolio of mutual funds curated on their profile, size of investment, and risk appetite, an idea which I'm sure will revolutionize the industry as it is. He has 2 decades worth of experience and expertise in the industry as a director of the multinational bank UBS, vice president of CIMB, and he's an alum of the esteemed institution of IIM Bangalore. Thank you, sir. Thank you very much for giving us the time of the day. And we're looking forward to having an interactive session with you. Thank you very much, sir.
Thank you, Divyam. And it's really an honor to be here today. And thank you for inviting me.
So as it is hosting you, sir, nothing like many people were actually looking forward to this conference, as many people have many doubts regarding this niche industry of equity research and portfolio management. So, sir, starting from the most asked question, and which covers at least all the basics, can you please explain the equity research industry structure to us?
Yeah, so before that, I'll just explain or tell you what do you do in equity research. I think equity research encompasses a variety of things. So what is the basic task or objective of doing equity research? And I just have noted down a few points, so I'll just share it with you.
Absolutely, sir.
So can you see my screen?
Yes, sir, it's visible, sir.
Yeah. So what do we do in equity research? Now, at a very broad level, it's basically looking or analyzing the business of the company, the industry it operates in. So let's take, for example, Infosys. It's in the IT industry. And so you look at the software or offshoring industry. What are the dynamics which drives that industry? What are the profit drivers? What are the growth drivers? Who are the clients? What are the margins like? What has been the growth? All kinds of. So you use certain models, you use certain frameworks, and then you look at the business of the company. So once you look at the industry, you look at the business in terms of how where is Infosys in that industry? Where is it placed? Is it a leader? Is it a follower? How has it been track record? How does it compares to peers in India, globally? What is its global standing? What are its? Then you look at the financial metrics. Where does it stand vis-a-vis margins? Where productivity? All kinds of things. So just to it gives you an idea of how the industry is and how the company is positioned in that industry, and then you assess the future prospects of the company in the industry. So let's say IT industry is worth the total size in the industry is maybe $100 billion. How will it be 4 years down the line, 5 years down the line? And is it a growing industry? Is it a fast growing industry? Can anything change in that industry? So we are living through like an unprecedented times of disruption. Industries are like vanishing by the wayside almost every day. So what are the threats to the industry? What are the opportunities? Can it grow faster? And how is Infosys positioned vis-a-vis those factors? So that gives you an idea of the future prospects of the company industry. And ultimately, all that analysis has to kind of translate or be drilled down into financial terms, right? Because ultimately, you're talking about the value of the company. So you drill it down in terms of its how will Infosys earnings be over the earnings. When I say earnings, means revenue and profits will be over the next 4 to 5 years, or maybe even longer if you can. And will it be higher than the peers? Will it be lower than the peers? Will it be higher than industry? How will its balance sheet look like in terms of other financial metrics. And then by doing all that, once you do all that, you arrive at a value of the business of the company. So which means that in purely financial terms, if I were to buy Infosys right now, what will it be? $100 billion or $200 billion? What is the value of the company? So that is the crux. So ultimately, there are various methods to arrive at the value. You probably would have heard about some of them. So that is what is we call the intrinsic value of the company.
Okay,
Now,
sir.
Once you once you determine that value, it did not be a very specific value that it is like $97.2 billion. It's very difficult to do that. So you
Yes,
could
sir.
arrive at a range.
Yeah, yeah,
It could
right.
be it could be various scenarios, whatever it is. But you in that process of looking at the financials, looking at industry, you get a huge insight into how the industry and the company operates, and that gives you some confidence in the value that you arrive at the uh, of the company. And once you arrive at the value, then that value can be used in different forms. So if it's a listed stock, you can see, okay, my value is 1,000 rupees a share, and the stock is trading at 500 rupees. So it looks like a great. I can buy it, and if I have confidence in my calculation of the value, that means it can potentially give me good returns in the listed market. Or it can be used even like when I was on the sell side in UBS or whatever. You print reports and you give it to clients on, and or independent research providers are nowadays also there. Or it can be used in investment banking. So if it's a company like let's say Zomato, which is coming out for an IPO, so you can use that value to determine what should be the IPO price, the listing price, or whatever. It can also be used for M&A. So if I were to buy out some company, I should know the value of the company.
Yeah, yeah,
Yes,
yeah.
sir. Absolutely, sir.
So without knowing, so and if it's a private company, you can use it as a private equity transaction. So basically, equity research is the basic building block of investing, or of most financial transactions, so to say. So only when you arrive at a value of the company, you can do any transaction with respect to that company, right?
Absolutely,
So
sir.
so that's the basic job of equity research. Now,
Yes, sir.
as when you join as let's say an analyst, that's or associate, that's the entry level uh, position that most people join straight out of business school or out of grad school. Then you are generally put attached to an analyst, and then you arrive at you're basically given an industry. So most analysts are industry specialists. Like I started my career looking at pharmaceuticals and fertilizer industries in India.
Okay, sir.
So I had a portfolio of companies. Most of them are listed companies. So I had to track them on a regular basis and do research on them, and arrive at write reports on them and notes on them. And I was obviously assisting a senior analyst at that point of time when I joined. And over a period of time, 2-3 years, I became a kind of what they call a name analyst or a writing analyst, in which reports are published in your
Okay.
own name. So then you are responsible for that. You are the lead, and you kind of drive that particular. So you have a portfolio of companies in a particular sector, and as you track the same sector over a period of time, maybe some people have been tracking the same sector for 25-30 years in the same field. So obviously you develop expertise, you develop relationships, you develop networks in that industry, and which helps you to identify uh, trends, identify the winners and losers, and that's how you earn your name.
Yes, sir.
So you would have seen that. Okay, in investing, at least this guy is known for this particular stock. So let's say, I'll take some names like Rakesh Junjunwala is known for buying Titan at a very low price.
Yeah, yeah,
So,
right.
right. So he's identified with that stock. So basically, he looked at the stock a very long time back, and he found a lot of potential. Maybe I don't know how he did some numbers, or maybe he did not do numbers. I don't know about that, but he found a lot of potential in the stock, and he invested at a long time, and he made a lot of money in that. So that's how kind of you make a mark in the business, and obviously, if it's your own money, you make a lot of money on that. So coming back to research, I mean, that's the uh, I hope I've answered your question. Is that the basic
Absolutely,
structure,
sir.
or the how that industry operates?
So, like, you have given us a very brilliant layout and a very concise on how what the foundations of an equity research is. So,
Yeah,
sir, leading that, like relating that to us, the people who just graduate from a college or looking forward to that job, this looks like it requires a lot of experience in order to become an analyst. So, like you shared with us that when you started out, you worked under an analyst in
yeah,
the pharmaceutical industry.
yeah,
So, can you elaborate on that experience over for us? How was
yeah.
working with an analyst was like?
See, that way, it's like any other job that you'll take. I mean, in any field, you would be you when you start or when you join, you will be assisting somebody, right? So you,
Yes, sir.
right, whether it's IT or whether it's manufacturing or any other industry. So uh, the only difference is the big difference I found was that you're attached to one single person and there's nobody else,
Okay, sir.
right? So and you work with him day in and day out, and so a lot of your learning and your kind of experiences are attached to that person. So I was lucky to have a good boss, and his boss, who was the head of research, were very kind of very, I would say, nice people, and very willing to share things and share learnings and their experience. So, so that, I mean, uh, so in that way, but I would say there is uh, there is less of a structure than maybe other industries in terms of there is uh, no fixed kind of way to learn this. So
Okay, sir.
I mean, a lot of the global banks have your templates, right? So you will have how to prepare an earnings model or how to write a report. All those templates will be given, but in terms of how much do you learn? So how much do you put in? You know, the field is very, very vast. So if I uh, want to learn about the pharmaceutical industry, I started with zero. I didn't even know what paracetamol means. So do I start off with saying, oh, okay, let me find out what paracetamol is, or what uh, you know analgin is, or do I get to the very basic? I was not an engineer. I was not a chemist also. So do I get to that basic, or do I focus on the industry? Do I
Mhm.
focus on the companies? So so to uh, I could go haywire just looking at uh, you know getting deep into very technical stuff, or
Yes,
I
sir.
could step back. So it depends a lot on you, and you can okay, I'll just at this point I'll share a slide as to what is, I think, what is needed or what skills are required. Yeah,
Okay. So the presentation is visible.
yeah. Sorry. So, what in terms of tangible skills, it's very basic. You need to understand finance and accounting. So, if you open an annual report, you should be able to. If you look at the profit and loss account, you should be able to make head or tail out of it. That okay, this is the revenue. What do you mean by receivables? What do you mean by there are templates to make
Yes,
you
yes.
understand the flow, but still you need to understand how things are, how a company earns money, where is the money coming from, where is it going, what are the uh, how are the cash flows, how are the trends. So
Yes, sir.
what is a good profit, what is a not so good profit. Sometimes profits are high but cash flow is not so good, so is it good or bad? So uh, to understand how the company is doing in terms of financial metrics, you need to know those basics of the accounting, and how to look at the company's competitive position or position with the vis-a-vis the industry. And there are various models to do that also. But these are very standardized basic ones. But as you go deeper, you learn more in terms of, and more important to see trends. How is the management? Uh, what is the past history of the management? So these are things that you will learn. And I would say soft skills are equally or more important, like probably most other industries. But in this case, as I said, because it's so vast that there is no limit to how much you can know. So if I'm looking at pharmaceutical, even if I know the uh, the let's say I'm looking at vaccines, I know the full process or the chemical reaction involved in the production of that.
Yes,
It
sir.
will add to my knowledge, but it will take a lot of time to understand
Mm.
that. And
Yes, yes.
maybe even if I don't know, even then I can do a good job. I don't need to know everything. So I have to decide. There is always a conflict that ideally I would like to know everything, but I
Yes, sir.
can't.
Mm.
So I
That
can
is
work 22 hours a day and try to know, get to know everything, but it will still not be enough. So, and at the end of, as somebody said, you need to have a helicopter vision. That is most important. When you say helicopter vision means you should be able to look at things from a very top down perspective and see
yes,
the
sir.
full picture. Mm. But at the same time, you need to also know the very basic nitty gritties. Why that is important? Because if there is any change, then you should be able to spot what will be the impact on the company. So if suppose I I know the very detail. Okay, let's say this for a particular, let's say a steel company, they use something called a graphite electrode in the blast furnace. Now, if the price of that electrode shoots up or the supply goes down, what will be the impact? Now, if I don't have that knowledge, or it's not put in my earnings model, or I haven't looked at it, then I won't be able to tell the impact,
Yes, sir.
right? But at the same time, I also need to know how the, let's say, some environmental regulation in some country will impact the whole industry as such and the impact on the company. So you need to look at the regulatory aspect, plus something as small as a, once like a 6 feet long electrode which is being used in the furnace. So that makes it very, very interesting, and also obviously very challenging.
Absolutely,
And
sir.
and that's why you keep on, the most exciting part I find is you keep on learning every day. And as Warren Buffett said that, the biggest thrill in this business is that you learn something new every day. And even at his age, when he's seen so much, he's learning every day. Because one, there is so much to learn, and secondly, things are changing so fast, and you need to be on top of that
Yes, sir.
change. So it's
Yeah.
probably unlike a corporate job where you have a fixed target, you have a fixed, let's say, budget, and you have a structure that's okay. You start an assistant manager, you become manager, you become a whatever branch manager, and then there is a very defined structure and a hierarchy. In this
Absolutely
business, there's
correct.
very little of that. So, like when I was in UBS, there were only 4 levels between me and probably the 4 or 5 levels between me and the global head. Okay, in a
All right.
manufacturing
Yeah.
company, there will be like probably 11 levels.
Yes, sir.
It's a very, very flat structure. So, and so you get a lot of independence, and plus, but then what comes along with it is a lot of responsibility.
Absolutely, sir. So there's a sentiment in equity research, while I was researching for it, I saw that many people see it as art, the valuation of the company. So how you gather information. So after you told me how we have to look at everything holistically, I can see where that aspect of art and the science comes from.
Yeah, yeah. So, so I mean, they say at least in investing, whether it's a science or an art, but there is a science aspect to it and an art. Uh, what happens is you start with the science. So unless you know the science, you cannot do the art. So
Absolutely, sir.
yeah, so I would say it's both. And as you graduate or you kind of get hold of the science, then it becomes an art. And see what has happened over a period of time is that see, when I joined, uh, your information was not so easily available. We just had hard copies of annual reports, and for industry data, there was no internet. Had just started in '95. There was hardly any internet. There was, emails had just started.
Yes, sir.
So gathering information was itself a challenge. So if you had information, you had an edge. So let's just say there are different types of edges. Like if I want to differentiate myself, I have to have an edge over others, right? So
Yes,
what
sir.
is the edge? Early, it's the information edge, the analytical edge, and the behavioral edge. So information edges, I have more information than you, so I can make a better decision. Now that edge has reduced, has gone down to zero now. Everybody has the same information. It's almost free. Anybody can access that
Yeah,
information.
that's absolutely true.
Yeah, yeah,
Even SEBI is working on the new regulations so that the difference between the information between analysts and the retail investor goes even
yeah,
down. Yeah.
yeah, correct. So that information edge is gone. The other is analytical edge. So everybody has the same information. How you look at it is the how you analyze it and reach a decision is how you define that analytical edge. So if I have the annual report, I can, if I have experience or I am more skilled, then I will be able to spot some weaknesses or some strengths which you might not be able to do that. So that's
Yeah, right.
analytical
Yeah.
edge. So I can see, okay, I read an annual report, I can see, oh, the, the cash flows are deteriorating, which you might not be able to spot. So that gives me an analytical edge. But that also now with AI, with there are so many packages which give you trends, and you just have to look at the screen and you can see, or some other ratios which are easily published. So
Yeah,
that
yeah.
is also, it's still there, but it's going away fast.
All
And
right. Yes.
the third is behavioral edge. So what is left now, where the art part comes in? Why I'm saying all this is the science part is kind of taken care of. So it's more and it's becoming more and more of an art. So the art part comes in where how you react to that same analysis and information becomes an edge. So
Yes.
for example, that if there's a bad news, let's say let's take the most recent example, COVID crisis, right? Everybody gets scared and everybody starts selling. No,
Yes. Yes.
the information is the same. Everybody has the same information, and the market tanks like 50% in 1 month. But then, if you have that, if you're looking at it very, very rationally, that okay, uh, there's a crisis, there's a problem, there's a lockdown, but this might not last forever. And you look at history, that okay, there have been epidemics. There are various ways to look at it, and if you have that kind of edge or that conviction that okay, this is not going to last, and when it changes, it will change very fast, then you would have probably, and you are convinced about it, you would have probably bought when it was when it had crashed, and that gives you an edge, whereas everybody else was selling, you were buying.
Yes, sir. That's the
Yes.
main
Yes.
point.
That's
Right, so
absolutely
that's
true.
the behavioral aspect, that's the art. There's no uh, everybody has the same information. It's the same company hasn't changed, industry hasn't changed, nothing has changed. Maybe some industries they have changed, but very few. So if you make a different decision in that point, that becomes an art.
So yes, sir. So like we have discussed now, we have talked a lot about the equity markets. But when we go towards the investment banking sector, where you deal with mergers and acquisitions, or let's say dealing in unlisted space, so how big of a role does equity research play, and like what's the process? Some things regarding that.
Yeah, so as I said, it's the basic building block. So if you join in even investment banking or M&A, you will join as an associate. So for maybe 2 3 years, you will be only building models and doing Excel spreadsheets.
Oh,
See,
okay.
every transaction, whether it's corporate finance, which means raising money, raising equity, raising debt, or it is M&A, requires that that business or that company has to be valued. So
Yes, right.
if you're doing, let's say Infosys is selling off its BPO division, or let's say Reliance last year did its geo placement, it sold stake
Yes.
to uh, Facebook and Google and everybody. So how they have to arrive at a value of that geo business. So somebody, some associate sitting in whether Reliance or Morgan Stanley or Google would have done a spreadsheet. You can question the assumptions there. You can say it is overvalued or undervalued, but there would have been a spreadsheet saying that this is the network of Geo. This is what we plan to do with it. 10 years down the line, this will be the revenue and profits of that company. And that's how this is the value of the company.
Yes,
So
right.
so even if you're head of M&A, you need to know that value and you need to be able to defend that value and negotiate on that value. Negotiation, see, there is the art of negotiation and there is again the science of negotiation. If I change, just substitute investing for negotiation or transaction, it'll be the same, right? So there
Yes,
is a
sir.
science. So you need to, as an analyst, you need to know the science. And then when you're okay with when you're thorough with the science, then you go to deal making, transaction negotiation. So
Got it.
it,
Yeah.
it's a very basic thing. So that's why you can call it investment research or even credit research. The credit research has two aspects. One is the quality, the researching the credit or debt of that company, and the other is macroeconomic research, which is you look at countries and how currencies will behave, how interest rates will behave. That's becoming very, very in this world of global capital flows. It's becoming very important. It's a big area. So that's if somebody is interested in macroeconomics, that's a very exciting area to
Yeah.
be. Now
Yeah.
there are new areas of research coming up. Commodities is one. Crypto is becoming important as an area. So there also now, I'm sure right now, not too much research is available. But as things change, there will be a lot of people doing research on cryptos.
Yeah, that's true.
And so right now, it's just a dream or a fantasy, whatever you want to call it. But uh, slowly, it will become more organized, and they will be.
Absolutely,
So,
sir.
so you could be researching some coins later on. So,
Mhm.
eh, so I think, but again, even if you do that, your basic idea will be to arrive at a value for, let's say, Ether or whatever, some coin, Bitcoin or whatever. And there will be some assumptions, there'll be some financial metrics, there'll be some analysis. All these things will be used even there.
Yeah, that's true. I mean, some institutions are already providing, some banks are providing services to institutional investors to buy crypto, like when you see Goldman Sachs.
Yeah. So there is a big report of Goldman Sachs on cryptocurrencies. So somebody, there's an analyst only who has written this. I mean, he might be a senior analyst, and he'll have a team, but there would be somebody, a team which has researched uh, into uh, what are the various factors which will drive crypto demand going forward. So
Yeah,
you that's research. So it might not be equity research, but it's research. So I'm sure that crypto analyst was probably not doing crypto 10 years back because there was no crypto that time.
yeah,
He was doing
sure.
something
Yes.
else, right? So it's uh, it's a I'm sure it's a very fast changing field, but research is the basic tenet block of everything.
Absolutely, sir. So, sir, this idea of research. So what exactly is the typical equity researcher's day to process? Like, to see the importance of research, you also come to appreciate what the life of a researcher is actually is, the processes which goes into doing that research, and how actually will you bring that idea to fruition through numbers.
Yeah. So I said, okay, I'll tell you what we did. Uh, I explained some parts, but I'll detail more. And then how does a typical day will work? So one is, I mean, if I'm, let's say, working in UBS, I have to write a report on. I have to keep track of 10 companies which are allotted to me in a particular industry. 10 could be 12, could be 15. So I have to write regular reports on them. Keep and regular means maybe once a month or once in 2-3 months, or when anything important occurs in that particular company. And also because I'm on the sell side, what they call brokerages or investment banks, I have to communicate these to my clients, who are basically institutional investors across the world, through either phone calls or emails or through presentations. So physical presentations or you know video presentations or whatever. So uh, for all that, I need to have the basic earnings model ready as a spreadsheet in Excel. So earnings model means that I have the financials for the last maybe 10, 15 years, and forecast for the next 5 to 7 years, detailed forecast. What drives the value? What drives the profits of these companies? What is the, and then how do I arrive? I have a target price because they were all listed companies. There's a target price. So how do I arrive at this target price? Whether I use DCF or whether I use PE, whatever valuation metric I use. So that's all in my earnings model, and then I come up with reports. Now, uh, to do now, you work in a team, right?
Yeah.
So I mean, the team will probably track 200 companies. There was a team of 10 to 12 analysts, and we used to meet every day in the morning. So there was a morning meeting at 8 o'clock. That's very early by Indian standards, but that's the global standard. So because
Oh,
8 to 8:30, 8:45, you have a morning meeting wherein you discuss uh, two things. One is any important news flow. So if there is something happening in my industry or my company, then I will tell the team about it. And the team is also, there are some salespeople who talk to the institutional investors on a daily basis. So I will update them and they will update the clients. So
All right.
so one is any important news flow, and the second is any report that I have come up with today, if I have, or it has been published. So I will update them and brief them on that. So 8 to 8:30 is the 8 8:30, around 8:30, 8:45 is the morning meeting, and then they have to update the clients before the market starts at 9:15. Market opens at 9:15, so they have to. The clients have to be updated before that, because if they have to do any buying or selling, they should be able to decide before the market opens. So
absolutely.
that's the morning part, and then after that you go and do even whatever your reports, pending reports, and update your models, and uh, go through news. So first 1 hour, those days we had newspapers. We don't have
Mm.
newspapers now, but we have, but we don't use them. So we used to like uh, go through 10 newspapers and then see if there's anything important, and update ourselves or talk to if anything important has happened, then suddenly I have my list of top clients. I have to call them and speak to them, or make a presentation. And then more importantly, there is something called earnings season, that every quarter the
Yeah.
earnings have company come out with earnings. So and then they have calls, so you have to be on those calls, and those get bunched up. So in like 4 days you will have 10 companies, so you have to listen to all their calls and come out with reports in them. So that's very very intense time. That takes very long. Then you have long hours during those days. So that's how, and periodically then you make a big report, in the sense that in this industry, I feel these are the basic, these are very important changes happening. So this is what an investor should do. So, and then you communicate them. So you go to what they call road shows, that you meet a lot of investors globally, go and meet them and say, this is my conviction that, okay, you should buy this, sell that, and this is what is happening in the industry. You update them. So that's the kind of basic, whatever, day-to-day functioning of it.
So, in my opinion, this is like the epitome of the human experience. Like you're working in a field where you're constantly learning and applying
Yes.
that knowledge
Yes.
uh, in a way which will impact the world. And you can rather see that impact. Like the ability to make a difference is something
Yes.
which is, in my opinion, the epitome of human experience. So,
Yes.
the people who are like, thank you, sir, these are very like getting to know what we will be able to do in this job field is very encouraging for the ones who is aspiring to go into that field. Thank you very much, sir. So like coming up to the next question is that like there are many freshers amongst us who
Hmm.
want to find the job opportunities in portfolio management domain and equity
Hmm.
research. So
Hmm.
sir, in your opinion, what are the skills which a fresher should have, like tangible skills? And do you think that these industries require a specialization, like a post graduation degree or diplomas?
See, as far as skills are concerned, I think we discussed that some time back, that the basic tangible skills uh, required, as I said, is a basic understanding or a good understanding of finance and accounting, and 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 some frameworks on how to analyze companies and industries. So, I mean, in a nutshell, that is the crux of things. Now, if you go to business school, then you would uh, know, you would learn all these things. So I guess if you would be equipped if you do those accounting courses or uh, corporate finance courses in business school. Uh, the thing is, sorry, what was the second part?
So basically, like you are an alum of the esteemed institution of IIM, right?
Yeah.
So is it a threshold or a requirement in order to get into this field? You need to be part of that.
See, it's changing now. Now, earlier it was essential that they used to prefer MBAs and CAs because it was more of a finance-driven thing. Now, at least in a lot of investing, uh, institutional investors and hedge funds and private equity guys are willing to look at people from all backgrounds, because I said the basic financial understanding or skill required is is not very tough. So you can do that in 6 months. Basic understanding of finance, accounting, and all these industry analysis can be done in 6 months. But the softer skills, those are either inborn or they are not uh, present only in MBAs or engineers, right?
Yeah,
So
right.
people are willing to look at now different uh, graduates from different fields also, right? And they are recruiting from
Yes, sir.
even BA arts institutes and even uh, fresh engineers without MBA experience. Now, there are some specialist courses like CFA and some most important is CFA, which a lot of people do, and it is important more so in Western countries. So their
Yes, sir.
CFA has gained a lot of importance and a lot of prominence, and they prefer that. But I would say now its significance is declining slowly, if you were to ask me.
Oh,
So if you have a CFA, then it's an advantage, but it's not so much of an advantage. I mean, if you're really interested, I think you should go ahead and do it,
yes,
because
sir.
you can do it along with your engineering or along with your MBA, or even along with a job. First you get your first job to, along with and uh, as you are being an associate. Along with that, you can pursue CFA also. So it gives you some advantage, but not a very significant one. So it's not the determining factor, I would say.
So
All
this
right.
gives hopes to us engineers who are present in the meet. Thank you
Yeah,
for
yeah.
letting us know about the reality of the market.
Uh, so like I have a personal question regarding this. I was looking for looking to see like if I want to go into finance, how will I switch the stream from engineering to finance?
Yeah.
So MBA was an option. Then you mentioned CFA, but when I look around in India, a lot of like I have seen like the most of the analysts in different brokerage houses are CAs.
Mm-hmm.
So like, but CA doesn't exactly teach you equity research. Although yes, you know about financial statements and corporate law, but a lot of people from CA background are also analysts or researchers.
Mm-hmm.
Uh, so like when you compare CA, CFA, MBA, what are your thoughts?
See, if I look at it from a recruiter's perspective, let's say I am in a large mutual fund or an investment institution, and I'm looking to hire associates. So what are the places I will look at? So I will look at MBAs and CAs. It also depends on the kind of training that I have. So if you look at most investors in India, they don't have a very formal training program, right? So
Yes, right.
they don't have very big teams also. So even let's say in UBS when I joined in 2006, we had team of 8-9 people. It expanded to 15 people, but that's hardly like in similarly UBS in Hong Kong would have maybe 45 people, and UBS in New York would have 200 people in equity research only.
Oh,
So
okay.
so then you have a very structured training program, and if you have that, then you can take in people from different streams. If you recruiting only a mutual fund will in India will recruit maybe 5 or 6 people in a year. So you don't have the resources to train them in very basic stuff. So then you will fall back on them knowing the basic stuff, which is your financial analysis and how to look at a company and
Right.
do so you get a head start. So MBAs and CAs have an advantage there.
All right.
So to that extent, it gives an advantage. But again, if you, I'm sure in other places, like I know for a fact that in equity research, uh, globally, they they look at a lot of people from the industry. So if you're joining a pharmaceutical team, and if you're a chemical engineer or a chemist, biochemistry graduate, then they
Yes.
will look at you favorably. That okay, financial analysis I can teach in 6 months, but biochemistry will take like 2 years for anybody, and
Yeah. Right.
not
Right.
everybody can do that. Financial
Yes, sir.
analysis, frankly, anybody can do. Right? And nowadays there are more tools available. See, that is also changing. So a lot of research is being automated. So the financial part is automated, but the industry, the intangible part, the art part, as I said, that cannot be automated. And that's where you need not a CA, but a uh, domain expertise, what they call domain expertise.
All right. All right. Yeah.
So
This
that
was
makes
very helpful. Yeah.
Yeah,
Thanks.
so even investment banking, the top technology investment bankers are actually people from the industry.
All right.
so
Right?
that makes
And
absolute sense, why that
yeah,
will happen, and
Yeah.
yeah.
the reality
So,
that happens.
so a lot of Silicon Valley entrepreneurs are becoming venture capitalists, right? Because you need to know what is. You don't need to know uh, the profit and loss, but you need to know whether the company will that product will do well or not. That is more
Right,
important,
right.
and that can come with
Absolutely,
your
sir.
technical expertise rather than financial expertise.
Yes, so that makes absolute sense. And
Yeah,
like that is even happening in all over the world.
yeah,
So, sir, if you give us the liberty, there are many people who enthusiastically waited to ask you questions which they had gathered throughout the conference. So,
sure.
sir, we got many questions from our YouTube live session as well. So Anmol Sahu asks, like, so how is the work-life balance of an asset manager? Is it really better than sell side roles, or like IB or sales and trading?
See, that all work-life balance is a very individual thing. So uh, there are investors or hedge fund investors who go mad, who have who work like 20 hours a day. It depends. So if you are a hedge fund manager, let's say in New York, who's looking at global markets, so then when you go to sleep, as I say, Asian markets are opening up.
Mhm.
You know? So if you have money invested in Tokyo, then you will need to know, and then you'll get up in the middle of the night and like want to see your position. So there are some managers who have screens in their bedrooms. So which will not be the case if you are a sell side analyst having a small portfolio of 10 to 12 companies, right? So it all depend. As I said, it's a vast field. It all depends on what profile you have and on your personal thing, how you take it. So the most successful investor in the world is Warren Buffett. He
Yes, sir.
says my calendar is clean. I have only one entry in my calendar, which is lunch. Right?
Oh,
So he doesn't do anything. Takes no appointments. He goes to the office at whatever time he goes, and he comes back and he plays bridge. Because he doesn't have to make decisions every day. His philosophy is I don't have to make decisions every day. So why should I
Right.
keep on top of everything? So when I see something, I will go whole hog. I will put all my money in it, and so that's the power of conviction. On the other hand, you have similar managers who work 20 hours a day, and so okay. Coming to the sales and trading part or the sell side part, there is
yes,
an
sir.
obligation there because you are catering to clients. So and it's a job. So obviously a job is more structured than your own fund or whatever. So therein you have uh, a defined way of and defined set of clients whom you have to call every day. So as I said, we started when I was in UBS. We started our morning meetings at 8 o'clock in the morning, and then if you have to call US clients, they will be available only after 8 o'clock in the evening. Or you can leave voicemail, but voicemails have very little impact. So you want to talk to the guy, so you have to wait till 8 or 9 o'clock in the office and then call him up, right? Uh, so
Yes, sir.
so there the 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 intensity required, just the physical work is probably more. Whereas on the buy side, it's a lot more about decision making in the sense that
Absolutely, sir.
you have to process a lot of information and you have to make decisions, and the quality of the decision making is most important. On the sales side, it is more of servicing business, so you have to keep on servicing your clients. Uh, you have to make calls, you have to write reports, you have to send emails. So that way it's physically more demanding probably, and while uh, making decisions is mentally more challenging because you have to have conviction, and you have to make the big decisions without kind of any backup as such. So,
Absolutely, sir. So,
Um,
sir, you
uh,
like that makes sense that this is very subjective and you can't really objectively
yeah,
compare
but
the two
you have to
sides
see
depending.
how your own personality, what fits you more, uh, than and then decide which one is more suited to you.
yeah,
Absolutely, sir.
that's absolutely. So, sir, the next question is from Ajit Pathak, and he is asking about FRM. It's a, the financial risk management certification. I think
Yeah.
is, yeah.
So I have a limited understanding of that, but what I see, risk management is becoming more important in every institution now, because obviously the volatility is increasing, risk is increasing, compliance uh, requirements from regulators are increasing. So, so, uh, so there are two ways. One is you become a kind of compliance personnel or compliance officer in institution, or risk manager. I would, risk manager is becoming more and more important, or you gain an understanding of risk from an investing or from investment banking perspective. So I guess the degree is more useful if you want to become a risk manager.
Okay.
All right,
But
all right.
I have very limited understanding of that.
So Ajit, hope that helps you. Now you can do more research on this topic on your own. So Siddharth Pershete is asking a question like, what does a company look in a fresher MBA candidate while hiring for equity research roles? This is very company specific thing. So what do you think? Like, what criteria are they judging you on
Yeah.
when they first choose you?
Yeah. See, one, I think most companies when they recruit are also first of all looking for a cultural fit, right? So they will want uh, they will have certain pre-decided criteria that they look for, which will vary across companies. But if you were to say something which is general in this field, I said one is your willingness to learn. I think that is more important in this field than any other field, I would say. And then this thing to, especially if you're going into portfolio investing, and your level of conviction in whatever you decide, uh, that can be found out in an interview, or how you communicate that becomes very important. So because I mean, if you're on the sell side, sell side research, you have to communicate your ideas to the client, and you have to be sound very convincing, and you have to be convinced about it. If you're in
Absolutely.
a portfolio investing, unless you have conviction, you won't be able to make the big decisions. And in investment banking, again, you have to sit across the table and negotiate a deal, which will require a lot of conviction. So I think your confidence, conviction become very, very important. Uh, so these two are, I think, the top two criteria which I would look for. Uh, then there will be company specific criteria, I guess.
Yes, sir. So, like you've already mentioned, the importance of developing soft skills while going through the institutional period.
Yeah, yeah.
So, Siddharth, hope that solves the query. So, that's all the questions we had, sir. Thank you very much again to giving us the time of the day. This was a very enlightening session for everyone who's present here. So, and on top of that, sir, we all know that this is a very trying times. Everyone's going through tough times due to lockdown, the pandemic. So we, as its family, hope that you all and your loved ones are doing well, and that you get the strength to make through any hurdles which come your way. Thank you very much, sir, for giving us
Thank
the
you,
time today.
and thank you, and all the best to you in your careers.
Thank you very
Thank you
much,
very
sir.
much, sir.
The session was really informative and we learned a lot. Yeah.
Thank you.
Thank you, sir.
Thank you, sir.